So the 2025 crypto bull run is here, and honestly, this might be the chance to set yourself up for life if you do it right. In this video, I'll walk you through the perfect strategy for making the most out of this bull market, including exactly what crypto to buy, when to jump in and out, and even how to protect yourself from losing it all. And at the end, I'll show you a plan that anyone can use to potentially turn a small investment into millions. But first, let's check out what Bitcoin is doing this year. Looking at this chart, Bitcoin's price has been steadily climbing recently to all-time highs in January and getting close to it right now. This spike is mainly due to big banks and institutions finally jumping into crypto, clearer laws making things safer and easier, plus cool tech like AI and other things in blockchain just getting better, pushing crypto further and even faster. It's a really exciting time, but you've got to play it smart. So let's dive in and figure out exactly how to make the most out of this crypto bull run. So it's clear that the crypto market is very exciting in 2025. Let's take a look at how you can build the perfect crypto portfolio. Taking some inspiration from this article here on modern diplomacy, your crypto portfolio is like a special toolbox. You need the right tools to do the job right. Now, if you take a look at this article, there's some different sections here. What's fueling the bull run, some key trends shaping the portfolio strategies in 2025, and then of course, building a balanced portfolio within this bull market. And this is kind of where the main point lies. First, you're going to want to start with Bitcoin and Ethereum. Think of Bitcoin like your safest tool. It's stable, it's trusted. Ethereum is great because lots of apps and games use it, making it important for many projects. But these two are the kind of stable cryptocurrencies, the main two that are going to be a lot less volatile than the rest of them, and then the ones that really kind of make the crypto market what it is. They're going to be the ones that all of the other cryptocurrencies follow. When Bitcoin goes up, everything else goes up. Next, you're going to want to add some coins that could grow faster. These are called altcoins. Coins like Solana are awesome because they let people make transactions really fast. XRP, another altcoin, helps banks send money across countries really quickly and cheaply. And these kinds of coins are definitely going to be a little bit more volatile, a little bit more risky. They're going to have bigger price changes, but that's where you make your money, where the risk is. Following along that train of thought, the more risky, the more money you have the potential to make. So next, you might want to think of something a little bit more fun, but still useful. Something like meme coins. There's one called Dawgz AI that they mention in this article from Modern Diplomacy. I'm not touting it, but it's just one that they mentioned. This particular one mixes funny meme stuff with certain AI technology that's helping traders. So think of meme coins that actually have some sort of value, some sort of usefulness to them, some actual technology that they're developing, rather than just releasing a coin like, Trump coin that doesn't have any sort of functionality to it. Then lastly, you're going to want to think about some stable coins like USDT, USDC, or DAI, or RLUSD. These coins don't change in value, essentially, for the most part. They are just like having cash ready when you need it. This is good just in case you see a good deal or a crypto that you really want goes down in price and you're like, wow, this is a good time to buy. People over at Modern Diplomacy, where this article is from, basically say that spreading your money across different types of crypto is important, and having cash or stable coins is always really good so that you can have some funds available when something goes on sale, as they say. When you really want to buy some crypto, you got to have some available, and having it in a stable coin rather than in cash makes it quicker. You can just immediately transfer those funds with decentralized exchange, kind of like Uniswap, or even if you just have it on an exchange like Coinbase and crypto.com, which I'll have links to below, and you can get some free crypto, but I'll mention that later. In general, spreading your money across different types of crypto or even different kinds of investments as a whole is very important. It helps you protect your money if one type of asset doesn't do well. And this is called diversification in all sorts of investments. Typically, people are spreading between stocks, ETFs, crypto, bonds, and all sorts of things, real estate even. So diversifying your investment assets is always smart because then on average, they're all going to go up. And that is over a long period of time. So remember, smart investing isn't about just picking one winner. It's about building a strong team that works together. Now that we know what to build our crypto toolbox with, let's talk about something just as important, which is knowing when to get in and out of the market. Getting your timing right can really make your crypto investment grow. One of the best ways to enter the market safely is doing something called dollar cost averaging, or DCA. You can find lots of useful information about DCA strategies online, especially like this post here on Reddit. Essentially, it's very simple. Instead of buying, let's say, $1,000 of crypto all at once, you can spread your buys out, for example, $100 a day for 10 days. Or if you're going to use something like your paycheck, then you do $200 every 2 weeks. That way, if the price drops suddenly, you're still safe because you're not betting everything all at once. If the price is $5 at the beginning of the week and $10 at the end of the week, and you were like, man, I think I'll wait till the end of the week. Well, then then your average price would be $10. Or if you bought all at the beginning, your average price would be $5. But if you spread it out across the week, then you're going to be right in the middle at 7.5. You lost 2.5, but you won 2.5, depending on when you buy. So if you average it out, you're going to get a more stable average cost per coin that you buy. Websites like this one, MudRex, recommend DCA or dollar cost averaging because it helps protect your money when the market gets wild and there's lots of volatility. But how do you know exactly when prices might drop or go up? Well, there's a handy tool called the Fear and Greed Index that I'll show you right here. So if you Google Fear and Greed Index crypto, the first thing that's going to come up usually is going to be CoinMarketCap, and they have a perfect little chart right here or graphic right here that shows you kind of where the fear and greed is in the market. Think of this as a mood tracker for crypto. It shows whether people feel scared or excited about buying crypto. If everyone is scared, that usually means the prices are low, perfect for buying. If everybody's feeling greed, then the prices are high and it's probably a good time to get out of the market and sell. Doesn't mean you should necessarily sell because prices could continue to go up, but it is an indicator of where things are at. And if you look at this chart over time, you can see that in March of 2024, there was very, very high greed. And then if you look down here, the price was also high. However, it kind of was stable after that. The fear kind of set in, and then the price was kind of up and down sideways. But if you look at the other hand, in November of 2024, you could see that there was extreme greed. The price was skyrocketing. It went up to 106,000 in December. And then there was just a bunch of fear in the market. There was tons of things going on. The whole stock market was crumbling to a certain extent. So fear set in. You can see this colored line right here. Fear was going down. Crypto for a little bit was up and down, but sideways here. See, it kind of recovered a little bit into late January, went up to about 106,000. And you could see that the fear and greed chart was kind of recovering. It was getting towards the greed side, but then immediately crashed down. And the prices of crypto kept going down. And so the price and fear and greed tend to follow one another, but sometimes you can see trends where, okay, the greed is going down, it's going towards fear, price isn't totally following it yet. So if you're good at calling it, you could have sold somewhere around here at about 100,000 and then let the fear keep going down and keep going down. And if you really caught the falling knife, as they say, you could have bought back at about 80,000 or something like that. But it's definitely very hard to know, okay, is this fear going to continue or is the greed going to resume? It's all a gamble, but it's definitely a helpful indicator at least. Now let's talk about getting out of the market. Setting profit targets is really, really helpful. For example, if you look at this article here on CoinRule, they talk about some strategies for beginners to be taking their profits. Some of their strategies here are to set your goals beforehand, use percentage-based profit taking, practice dollar cost averaging exit, set price targets, and using stop loss and trailing stop orders. So I'll describe a little bit very simply what these are. Setting clear goals means when you start investing, you go, okay, I want the price to get to this level, and know when you're going to exit before you even make your first investment. The next one is using percentage-based profit taking. Let's say, for example, your investment increases in value by 30%, and then you decide, okay, I'm going to sell off 30% of my original investment. And then next time it decides to go up by another 30%, then you're going to sell off 30% of your original investment. And so then you'll only have 1/3 of your investment left. And so basically, as the prices increase, you can sell off. And, some people even, let's say when they have an investment and it goes up by some amount, let's say 50%, what a lot of people will do will sell the amount of money that they initially invested, and then the remaining amount will be what they keep in there. So I invest $100 and it goes up to $150. I'll sell $100 worth of that, and then I'll own $50 worth of that. And then it's just free money, playing with the house's money. So that's what the percentage-based strategy for profit taking is. The dollar cost averaging exit, similar to dollar cost averaging entrance. You just kind of average out. You decide how much you want to sell and the time period in which you want to sell it. And then you're going to average what your value is of each crypto on your way out. Next one is setting price targets, similar to the first one. It's, you go into it with, I'm going to sell at this dollar value, and then you just stick to it. Last one here is using a stop loss and trailing stop orders. So these are a little intricate, and you do it within your exchange or the software or website that you are investing on. Basically, a stop loss is to prevent you from losing too much money. So it's an automated tool within whatever trading platform you're using to stop you from losing any more money. For example, if I buy something at $100 and I want it to automatically sell if the price hits $90, it will automatically do that for me because I don't want to lose any more money than that. It's difficult to, really really put these correct numbers in here and have it play out exactly how you want it to, because within crypto, things are volatile. So if I went for that 100 to 90 stop loss, that probably would get hit because things move 10% within a day sometimes. So I would have to probably put a stop loss at 50% instead to give it some wiggle room so that my stop loss isn't triggered and then it's not sold. Because, if you're looking for gains, you don't want your stop loss to get hit. So it's just a way to prevent you from losing more than you're willing to lose. But you got to have a high risk tolerance in cryptocurrency, of course. Now that we've talked about timing your trades, let's zoom out a bit and look at the bigger picture. What's happening with crypto laws around the world? This stuff might sound boring, but it can actually make or break your whole investment. In the US, things are heating up pretty fast. According to Investors Business Daily, the Trump administration is rolling out crypto-friendly executive orders, and there's even talk about the US government building Bitcoin reserves. And obviously this is kind of already in flow. As you can see from this article on investors.com back in January of 2025, the executive order was pretty fast from Trump after the inauguration, and there was lots and lots of movement within crypto. It's pretty funny to me to see America go from, we don't trust Bitcoin to, okay, we're stacking it. We're putting it in our investment portfolio. It's good to see that. And it's also a very big indicator of, okay, what's going to happen with crypto over the long term? If we get government involvement, obviously that's a great sign. This kind of support could drive prices way higher, especially if these policies stick throughout the rest of 2025 and even more policies kind of go towards crypto positive things. Globally, it's kind of a mixed bag. Some countries are still figuring out what to do, while others are going full speed ahead. On this article from A16 Crypto, they point out that central bank digital currencies, or CBDCs, are gaining a lot of traction in Asia and Europe. This means that governments are finally embracing digital money, which could lead to faster crypto adoption for regular folks like us. Also, stablecoins like USDC and USDT are being used more for real-world payments, and that's a huge deal. It shows that crypto is starting to function like regular money, and governments are finally paying attention, at least to the real-world use cases of crypto. So while you're building your portfolio and watching the charts, don't ignore the rules being written in the background. They could shape what coins survive and which ones skyrocket. So while all the rules and timing of things are super important, let's also not forget one of the coolest things about crypto, which is that it keeps evolving with new technology. That's actually what's making 2025 such an exciting year for investors. So let's talk about how crypto is really teaming up with technology, and in this case, particularly 2025, with artificial intelligence, or AI. Right now, projects are starting to mix AI with blockchain technology. Blockchain technology, of course, being cryptocurrencies, which means that you've got smart technology working inside of a secure system. According to this article from Modern Diplomacy that we were looking at before, this combo is really creating a powerful platform, or many powerful platforms, that can think and react and handle tasks automatically. And this is huge because it means that crypto tools are getting smarter and easier to use. Okay, now let's talk about DeFi. That's short for decentralized finance. This is like building a bank that runs by itself using code. In DeFi, you can lend your crypto, earn interest, or stake tokens and get rewarded. Basically, all this means that you can do stuff with your crypto so that it earns more crypto. But guess what? The space of DeFi is growing very fast. And NFTs, they're not even just art anymore. People are using them in games and music and even in real estate. So some NFTs now have come with real world benefits like access to events or income from properties. When taking a look at this image right here with all of the technological innovations that are going on within crypto, it's very important to keep in mind these keywords when searching for the crypto that you want to invest in. If it's got AI and blockchain integration, NFT applications like real estate, gaming, or art, or even DeFi applications, places like Aave, Uniswap, and Compound, all of these are going to be some important keywords to search because this is where the innovation is happening. Tech like this is what's driving big gains for investors, and you'll really want to know which projects are leading the charge in their respective section of crypto. So now that you know how to find the best coins and use smart technology, let's make sure you don't lose it all. This part is all about protecting your money, because the truth is, even if you make the perfect picks, one bad move can wipe it all out. The first smart move is called diversification. We touched on it previously before, but that's just a fancy way of saying don't put all your eggs in one basket. You want to spread your money across different coins and types of cryptos, some big, some small, some risky, some safe. That way, if one goes down, you've still got others holding strong. Next up is security. This is very important. If you're holding on to a lot of crypto, don't leave it sitting on an exchange. Use something called a hardware wallet. This is like a USB drive for your crypto, and it keeps your coins way safer from hackers. And no matter what platform you use, always turn on two-factor authentication. It's like a secret code that protects your account. Also, keep your eyes open for scams and fake messages. If it sounds too good to be true, it probably is. Check links very carefully, never share your seed phrase, and don't fall for random giveaways. Take a look at this simple checklist with all of these important tips. Print it, save it, screenshot it, use it, because in crypto, the winners aren't just the smartest, they're also the safest. Now that you know how to stay safe and manage your risk, let's talk about something that's just as important, which is learning and staying connected with the crypto community. Because the truth is, no matter how much you know today, the space moves very, very fast. If you're not learning, then you're falling behind. I definitely recommend that you subscribe so you can stay up to date with all things crypto, but another great place to be learning consistently is Reddit, specifically the cryptocurrency subreddit. And you can see that here. This place is full of real people sharing their wins, their losses, their opinions about what's going on. If you check some of these latest posts, especially one called "What's your favorite crypto coin for 2025?" you'll see lots of different answers. So if I'm looking at the cryptocurrency subreddit right here, I can just search in this and I would search 2025 favorite crypto. So you can see a few of the most recent posts here based on relevance or however you want to filter this. One I like right here: what coins do you hold and what are your predictions for their tops in 2025? So I would just go through this. Look, okay, people are talking about Cardano, Ethereum, XRP, Cardano again, Sol, Ergo. Okay, and then there's some more people talking about the background. Oh, taking one look at Ergo, blah, blah, blah. There's lots of different commentary on these things and you can really learn from people. The tough part is then trusting, okay, who's got a good opinion and who's just saying something for no reason because they just want it to go up. To me, it's really important reading why people believe in these coins, and that can give you ideas, show you trends that are just starting, rather than just seeing the things that say Bitcoin at 225,000. These longer descriptions are going to give you a lot more information, and then, especially into smaller coins that you might not have known about before, you can get a little bit of background. You can obviously follow some smart YouTubers and podcasters who are explaining crypto in simple ways. If someone's always talking about new coins or smart trading tips, that's probably someone worth following. And if you really want to stay ahead, sign up for crypto newsletters. These drop info straight into your inbox and help you stay on top of news and trends and warning signs. Coinbase has one that comes out every couple weeks, but even just searching on Google, crypto newsletter, you'll find plenty. Staying connected means that you have a much better chance of spotting the next big thing early and avoid getting stuck when things change fast. If you're ready to get into crypto, use the links in the description for Coinbase and crypto.com, where you can get $50 in crypto just for signing up with those links. And if you're trying to get risky, want to buy some meme coins, check out the link in the description to MoonShot, where you can claim some free meme coins just by signing up. Click that link and then click the claim meme coins button. If you learned something new and enjoyed this video, make sure to hit that like button. And if you want to stay up to date with all things crypto, make sure to subscribe. I'll catch you in the next one.